Hello everyone, Vladimir here with you. Welcome to my weekly review for the last week of June, 27th of June. First of all, I just want to welcome once again everyone who have joined my new service, the Vladimir Forex Signals. If you still did not have the chance to watch the site, you are invited to go www.vladimirforexsignals.com to watch the site, to join our service. We begin trading on Monday. I will continue my free weekly reviews on the blog. No questions about that. That's what I always do. I will keep update on blog, of course, as well. But all the majority of my work and my trades and my webinars will be now on the new service, Vladimir Forex Signals. This week we begin our live trading group on Monday every day during the week. Well, and now let's go a little bit for the market and see what opportunities are we going to have probably during this week and during the upcoming days. So first of all, let's see and try to understand what week did we have. Let's begin with the euro dollar, right? Well, it was a really important fundamental week. First, Bernanke. On the previous week, I told you wait for Bernanke. It was on 22nd June. I asked you to wait for Bernanke. Don't take big risks until we can see how the market responds. And the market responded. Well, we saw the euro and everything actually rise at the beginning, but then crashed down. Why? Because Bernanke show his passive attitude for the upcoming future, and that actually reacted the market with passive and without any belief for any good things from the market, and we saw a drop. Then we had on Thursday, almost the end of the US session, we have had good news from Europe, from Greece, that took all the pairs up again. And this way, actually, the market ended. So we have passive attitude from Bernanke that says that US economic does not look good. He will not go for QE number 3 as for now. He thinks that the economic will actually be in better situations during the next 2-3 years, but not just right now. He does not have any idea why it's in such a situation, but still believes that it's going to be much better. Well, some optimism there is still on Bernanke, but actually it's a passive talk. Then from Europe, right? Still big mess with Greece. Still big mess with Greece. Yes, Europe looks like going to provide another help program, but how long? How long? What's going to happen if Spain or Italy or Ireland will join it? That's what all the market talks about, and that's actually the big mess from the euro, and that's why the euro actually is zigzagging most of the last period. Actually, from, as you can see, from beginning of May, it's actually zigzagging in very same range of 700. It's a big range, of course. I agree with you. But if we take a look on the long terms, it's actually a range in between. Well, what's going to happen next? Let's try to understand a little bit. I am still neutral for the euro long run. I still don't understand how the help program, the possible help program, will actually affect. We have our, as you can see here, we have our downslope, clear downslope of all indicators. But the one thing is that the RSI still holds 50. And the Bollinger Band still holds the 20 moving average, which is sitting on the support 142. A weekly close below this level should provide with a down opportunity. Right? That's for the weekly chart. Let's go for the daily chart. What do we have here? Actually, not a lot, right? We have kind of uptrend line just right here, as you can see, right, from the spikes. It still sits on the uptrend line. Still nothing to do. All right. This support, which is 141.50, actually, still 141. Sorry, 141. This support still holds the pair. If it breaks below, then probably, of course, we will go all the way to 140 again, maybe even lower to 139, which will meet us on the 200 moving average. That brings us actually for a bearish attitude for the euro, bearish trend possible, but I still neutral. I want to see the break first of all before I make my decision. On 4-hour chart, there is actually even possible bullish divergence that could take it up. So big mass, stay tuned, but still don't take despair. About the British pound against the US dollar, it breaks. It broke actually the 200 moving average. It went down all the way 160 and now even closed below. Let's watch the weekly chart. The same stuff. Slope down, and cross 50. Stochastic down. Everything looks good. Everything looks good. And that's actually, oh, don't look at that. That's my some sell here. Right? It does look bearish. It does look bearish. Now, how we can join it? Well, we have had a beautiful down move after this correction here. We have had 1, 2, 3 down moves, right? Actually, and now it looks like being blocked here. I believe it still will go up, but this divergence should provide us first of all with some correction and then a sell opportunity. Inner news from the market says that many traders, I'm not talking about the investors, but many traders, right, look for the British pound for all down move for at least 156. I must agree with them. And I think it will be good, clever, action to join them after the correction, because this divergence on 4-hour chart should take effect together with the daily next support, right, and should provide us with a correction. I would bet if during the next 3 to 5 days we see a correction to around 160 80 to 161 and blocked on this level, we actually will not see a daily close above. It could be a good call to resell the British pound dollar. So I am bearish for the long term. I am little ten with bullish for the maybe first days for possible some correction. I think it could go to 158.50 maybe from here before, just to complete the divergence and then up. But let's see just how the week begins. Aussie dollar. Well, what a pair. What a pair. Finally, we have a close below 105. Finally, we have a close below 105. But that's a Marubozu call. That's a Marubozu call. And I say, oh my god, what does it mean? Right? Oh my god, what does it mean? Actually, we have this, as you can see, we have these sideways moves. Right? We have, sorry, these sideways moves. And it should continue down for all the way to complete this correction around 102. So my trend is bearish, but I have only one thing in worry, and that's the inverted hammer, the long divergence here, right? And the Marubozu. And this hammer ended with the Marubozu. After Marubozu, usually the trend make correction. So I do think that the Australian could also force correct, and then it should continue down to 102. By the way, if you take a look on the weekly chart, you see how it sits on the weekly 20 moving average of the Bollinger Bands, which makes this uh, trade as for now very risky. Very risky. It should be clear close below, not just 10 pips as it did during this day, and then retest, and then good call for all the way down for the 102 level. Maybe even will meet it on the 200 moving average. So I am bearish, but I want to make a conservative entry, still close below, retest the 105 and then sell. As for now, from my point of view, it still sits on the same level. Dollar Canadian, after all the sideways moves, finally flight up. And now let's try to see till when. If you watch this chart, we have had these downtrend lines finally was broken, right? And the big close above, but there is a one but. As for now, right? Just a second. There is 200 moving average on the daily chart. It is also a Marubozu, which should force provide with a correction and maybe even end of this uptrend line. From my point of view, this is what's going to happen. But that's only actually um, a guess for now, because I do want to see how the market behaves. We have this flag, right? We have this flag. I think this flag is about to be duplicated. So I do believe we are going to have the up again to the parity level at least. Parity level means 1.000 when the pairs are equal to each other. So I do believe up, but I think we should see a retrace first to 0.9820, 0.98. Then we have to test and see if it does not close immediately below, if it just sits on this level and continue up again. That's our buy to parity level. That's for the dollar Canadian. Also does look good. About dollar yen, I'm still neutral. Dollar franc, I am still neutral. I do want to talk about the euro against the franc. If you pay attention, friends, weekly chart is critically divergent, right? Critically divergent. Daily chart as well, monthly chart as well. Everything actually divergent. But the downtrend is so clear, so obvious, so clear, so obvious. So I wanted to finish first with the daily uh, bullish candle pattern. I wanted to be stopped here. Stochastic cross up. That would give us a call. Please remember that it would be aggressive call. For conservative, I will still wait for the break of this downtrend line on the daily chart. So as for now, still bearish, but stay tuned to for possible up move up buy. Another interesting pair is Swiss against the yen. Daily rise and daily divergence, as you can see. That means, friends, get ready for possible bearish move. I think that the Swiss yen will stop very soon, somewhere in between 97 to 99, and drop down from this level at least to 92. That's my opinions. Of course, it will take a while. It's weekly chart. It's a long term. On the daily chart, there is a bearish divergence as well. You know the rules. You know Vlad's rules. Cross of the MACD up and then down again. Cross stochastic down. Bearish candle pattern. That would be our call to sell for long run. And it also sits good with the bearish, as you can see, the bearish harmonical Gartley. Right? It should take us first of all from around this area to 92, somewhere there, and then maybe even lower. That's about Swiss yen, which is also a beautiful pair to follow. And now for some interesting thing, gold finally broke down, finally broke down the uptrend line, right? Now even closed below 50 moving average. I do want to see a retrace around 1550, 1570, sorry, 1517. That would be a nice sell with stop above 1540 and profit around 4, sorry, previous support 1475, second target 1450, fourth target 1420. Gold does look bearish. I am bearish for the gold. Silver, the same. There is a support which still holds. I will still want to see a close below the support, and it will take us all the way for 200 moving average of the daily chart, but it does look bearish. About the indices, well, we're still moving in between. We have a double doji right now, you see? We have a double doji right now. But we also have, even more important, uptrend line. I'm talking about the S&P 500. It does look bearish. I don't see any bullish possible sign as for now, but I do want to see another bearish week for this S&P. Aggressive entry, enter with the break of the downtrend, with the uptrend line. For the conservative, let's wait for a close below. On the daily chart, we could still get, as you can see here, we can still get a bullish divergence being completed here, which will take us up, but as I said, little early, as it's still we still have to see how the week behaves actually. Well, those my favorite friends about this about the Euro British Pound. I remind you, investors still have their pending to sell at 0.90. That's all, friends. Let me just once again invite you to my new service. I will begin everything as promised just right now. The weekly review will be on the blog, the updates will be on the blog and Twitter, of course. But the majority, the live trading rooms and the seminars, the webinars, everything, the guest traders, the harmonic traders, everything will be on the new service, which you can find at www.vladimirforexsignals.com. Friends, thank you very much for your time watching this video. I wish us fantastic week, good luck, and all the best. Yours, Vladimir.